everyone. Noah Miller here from LePage Benchmark. I'm a realtor here in Calgary, and I have a special guest on today, Jodi Schulz from Source Mortgage. Hey, Jodi.
Hey, Noah. Thanks for having me on. Nice to see you.
Nice to see you too. So today's a fairly significant day in that lots of people were waiting till December 7th, 8 o'clock in the morning. The Bank of Canada made an announcement about their overnight rate. Can you tell us a little bit about what went on?
Yeah, so Bank of Canada this morning announced a 50 basis points increase. So that's equivalent to 0.5% or half a percentage. And what that means really essentially, why does that impact all of us as normal people living out there? Anyone who has variable rate products, whether that's a mortgage, a home equity line of credit, or a HELOC, and even some unsecured debts like lines of credits and such may be on variable interest rates. And when Bank of Canada increases their prime rate, then the interest rate that we're paying on those debts increases as well. So that will impact payments for people and, of course, the overall amount of interest that they're borrowing on those loans.
So a question for you then, like how quickly do these lenders make these changes now that 8 o'clock this morning, we heard the news? How quickly does this change?
That's a great question, Noah. It usually takes a couple of days before they implement it. So probably by Friday, most people can expect an announcement from their lender stating that the rate has changed on their various borrowing products. And then the payments on those would be impacted the next payment due. So whenever that is for different borrowers.
Okay, so I imagine lots of people on a variable rate are going to get a letter in the mail from their lender. It's going to say, hey, rates are going up. This isn't the end of the world, is it? I mean, this is the Bank of Canada trying to fight inflation. They've done 7 rate hikes this year, I believe. Yeah. So maybe we could be close, or we're at the end of the Bank of Canada trying to rein in inflation, and maybe this will turn things around. So the outlook here, what happens on the fixed rate side, considering maybe a lot of the lenders are thinking this might be the last rate hike?
Yeah, and that certainly is the mentality that we're hearing from a lot of economists, that predictions that this is probably the end of it, or the tail end of these increases. Fixed interest rates have actually come down a little bit in the last couple of weeks. So we are seeing fixed interest rates under 5% for insured mortgage loans, which is people who are putting less than 20% down. So if you are panicking, I wouldn't panic, first of all. I mean, this was expected. And to put things in perspective, this 0.5% increase represents about $30 per month for every $100,000 of money that's been lent out. So depending on the size of your mortgage, obviously, this might be more impactful to some than others. But for some that have, a little bit lower mortgage, $30 a month per 100,000 isn't going to be a huge amount additional. I think the issue is that we've had, like, to your point, a lot of increases that have happened already in 2022. And so if you are the type that you're feeling like this is stretching your budget, you're now, you're stretched beyond to where you want to be, then certainly you can always call and get a quote for locking into a fixed interest rate. The fixed rates are in most cases under what the new variables are. And so that's always an option. Just cautioning people, though, that when you do that, you can't go back. So you don't want to end up with remorse that you locked into a fixed rate, and let's say in a year the variable comes down again and you now no longer can take advantage of that. So definitely personal choice, and depending upon what your situation is with your family and your cash flow, but definitely call an expert, a mortgage broker or your banker, and get a quote for that fixed rate if you are stressed out, and try to analyze sort of the pros and cons of both options. But yeah, like the fixed interest rates actually are not a bad option right now, just because they have come down compared to the variable.
Yeah, and I have below Jodi there, her contact information. You can always reach out to her. Now, I'm wondering, it's December 7th, what time? It's 10:15 in the morning. Can you give an idea of what the 5-year fixed might be in a range for somebody that's looking to get into a fixed mortgage?
For sure. So rates are hard, Noah, because they're so deal dependent. Like it will depend upon how much money the person put down when they purchased, what their amortization is on their loan, as well as what the use of their property is, whether it's a rental or owner occupied or whatnot. But just a really rough, the lowest rate is going to be somewhere around 4.79 for a 5-year fixed. And then they kind of go up from there and all the way up to say, 5.75, depending on, again, what the use of the property is and everything. And your lender, if you are getting a quote for locking in, will base it upon how much is left on your term as well. So if you have 4 years left, you'll probably be quoted a 4-year fixed rate, or 3 years left, 3-year, and so on and so forth. But definitely understanding it's not just the rate and the payment, but also the pros and cons of both products. Like a variable interest rate has a much lower payout penalty if you are needing to sell it or refinance it. And so that is a reason that a lot of people will take a variable if they're uncertain about what they're going to do with the property. Or maybe they know they are going to want to refinance it and access equity to renovate or something. Then a fixed rate would probably not be suitable for those people. So it's just important to look at not just the rate, but also what your plans are for future with that home.
Totally. I hear what you're saying. So best bet is to call a mortgage broker like yourself to get the numbers running to see what product is the best fit for you. Now,
Absolutely.
yeah, and my last question is just along those lines is, as a mortgage broker, can you explain what that means, being a mortgage broker as opposed to somebody going into their bank and talking to a mortgage specialist?
Yeah, for sure. So a mortgage specialist at a bank, while they're wonderful, they only work with their bank's products. So they can only offer you what is available at, say, Scotiabank, TD, BMO, wherever they work. As a mortgage broker, we have access to about 60 different lenders, including most of the major banks. So we can kind of shop the market for our clients and, select the right product for them, not just rate, but maybe there's other features that are important or little things we need to get the deal qualified and that kind of thing. There's also no cost to use a mortgage broker ever. Our fees are covered by the bank, so there's no cost or obligation to call. In terms of these lock-in questions, if we didn't do your mortgage, we can still help you out. We do need consent signed if you want us to kind of call your bank on your behalf and get quotes to lock in. But that's definitely something that we can help out with, and giving advice. Like, no one's meant to navigate this alone. No, you don't have a license as a mortgage broker as a random client, and trying to figure out what the best option is for you and your family shouldn't be something that you try to figure out on your own. Definitely reach out to a broker if you have a mortgage broker, or a new mortgage broker if you've never used one before, or your bank as well can help provide that advice to you.
Okay, so mortgage brokers they tap into 60 different lenders, and they can work with banks, including all those lenders. There's some banks that you work with hand in hand, and you do renewals as well. When people are coming up with they have to renew their mortgage after a 5-year fixed, they can call you. They don't have to go back to the same lenders
No, and
necessarily.
that's a really good point, because people sometimes think they have to stick with the same lender. Like, your lender will send you out a renewal notice and you can just sign that, but it's almost never the best rate because they want to make money. So they're going to send you out an offer that might be a little bit higher than what market rates are. And if you give a mortgage broker a call, we can kind of shop the market and come up with likely a lower rate for you that can save thousands of dollars. And another opportunity is at renewal. That's a great time to take out equity. So a lot of people in Alberta have noticed their home values have increased in the last few years, and they're sitting on some equity. So it's a great time to look at maybe pulling that equity out, maybe consolidating some unsecured debt that's costing you some money and some higher interest. Or maybe you want to just have it sitting there for future. If you want to renovate, invest, maybe buy a second home, buy an investment property. It's a great time to buy rentals. So those are, at maturity or renewal, that's a great time to look into all of those options.
Amazing. Okay, well, thanks so much for all this information, and hopefully everyone out there that sees this, it's given some value. And don't hesitate to reach out to Jodi if you want to. Any questions, she's happy to answer them.
More than happy to answer them. Call, text anytime.
Awesome. Okay, thanks so much, Jodi. We'll talk to you again soon.
Yeah, take care.
Okay, bye.
Bye.